Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we are talking about a little bit by the dip this morning, a little by the dip in the cruise line through our week after Norwegian extended their suspensions yesterday. We talk about DraftKings, talk about Oracle, talk about some stocks that we observed yesterday that were strong and weak, and what stocks we want to potentially buy and sell today. We'll also discuss the strategy of trading off of unusual options activity and how that can and can't work. Our guest is Mish Schneider. She's the Director of Trading Education and Research at MarketGauge. She will join the show at 8:35. Joel, why don't we bring you on here and give us a quick update here on what has happened in the overnight session.
Good morning, Spencer. Good morning, traders and investors. I'm going to say around the world. I saw a tweet yesterday about a gentleman in London that listens to us, and he's going to tell more of his buddies in London. Shout out to all of you overseas tuning in for the most up-to-date market action. We're trading up 10 3/4 handles here at 29 1/4. We just had a little drop. I'm not sure what that was attributed to. Weakness early in the after hours trading off the Norwegian cruise line news, dipped under 3,100, 30.9650. The buy the dippers came in, took us up to 31.47, and now we're backing off there. 2 days before the triple wit, so you're getting some a little bit of two-sided action here. Crude in the red by 61 cents at 37.77. Gold down 11.90 at 17.70. A lot of sevens in there. Silver in the red by a little over a penny at 17.64. Bitcoin, that's down $25 at 9,505. Triple D, that little break there. Nothing. I mean, we make a big deal out of 5, 6, 7.
Yeah, we're just bouncing around.
Yeah, we are.
This session, and you could have called this show Chop Fest, Spencer, because last night they were chopping the stocks around. We were trading actually not bad until that Norwegian headline hit. And that hit, I think, around 5 o'clock. Can you give us that headline, Spencer? And then we're going to break down all the action.
I can do that. Norwegian announced they are extending the suspensions of their cruise lines to at least October. They also canceled a few cruises set to depart in October, but they are extending. I think they were set to, the suspensions were set to expire as it stood in like August or September, and they pushed it back to at least October.
And that headline brought Norwegian down. You can see the free fall. Bring up the after hours chart. As soon as that headline hit, they started hitting it, and they were relentless. And it did get overdone. I know Portnoy even tweeted that he was buying the dip. It got a little bit ridiculously overdone. I thought about buying the dip. I just didn't have the guts to do it. It went down to 20, then 19. Then it went under 18 about 20 minutes after the headline. Then they started to find, and say, hey, this isn't completely unexpected that they would, extend this. I mean, COVID hasn't gone away. So I think, just from that perspective, it was a little bit overdone last night when it got down to under 18. So it's bounced back. It's still trading down 9% on the headline, but it took everything with it. So obviously the other cruise lines down in sympathy, especially last night. They've all bounced back substantially with the overall market, but some still trading in the red. RCL is down 4% here this morning. You can bring up CCL, which obviously trades as an ADR, so you already know where the price is. It's down 4.4% as well. But then they started hitting the airlines. They started hitting everything. So they started hitting Boeing last night. They started hitting all the airline stocks. Bring up the after hours chart of Boeing. Boeing, right after the bell, trades up over $200. Then it leaks it. Then this Norwegian headline comes out. Then they decide they don't want anything to do with travel or tourism or entertainment whatsoever. And they hit all those stocks. So Boeing after hours last night, if you show that chart, I believe it got under $190. I did buy the dip on Boeing. I've already sold it here, so I can freely talk about it. But just got overdone. So, and I was obviously hedging as well. I'm not just naked buying Boeing. I was hedging with other stuff, but it's back up. It's come back a bit. Norwegian was the catalyst for the sell-off in all of these stocks.
Yeah, I'm taking a look. We'll just go with the headline stock, and that's Norwegian. I mean, just big red bars there. They pounded it. If you were paying attention to the 2-day low, or 2-day low, 1817. And where'd you get to? Not much below that. You did 1787. So you definitely took some heat there. Rebounded, got a quick print up to 20, just at 1999, now settled in. Let's look at this in relation to yesterday's range. You need to get to 2011, and that's where the bounce took to fill the gap here. I mean, this is not good news. I mean, they're losing a lot of money, and they're going to continue to lose a lot of money.
But let's put it in perspective. Do you think
Sure.
this was total? Wouldn't this be expected to a certain extent? I mean, we're seeing
Dennis.
cases rise.
No, the crisis is over. People are going to.
So this is all new information, the extension. So let's knock another 15% off the price of Norwegian last night, because the crisis is supposedly over. It's not over. And we know it's not over. I'm just shocked that they hit it that hard, because I would have thought that some of this would have, that it's not completely out of the blue that they would extend this. I mean, they've extended it multiple times already. So I don't know. I guess people were hopeful they were going to be cruising sooner than, and obviously not the case.
Surprised they brought it back. I mean,
Norwegian was on CNBC though, and I believe he was on Mad Money about a month ago, saying they got enough money to go for a year. So if they don't even cruise for the next year, they're solvent, is what they were saying. I don't know how true that is. I haven't looked into the financials of Norwegian myself, but that's what the CEO was saying on Mad Money about a month ago, that they don't need to cruise for a year and they are completely solvent and fine. So I guess, then it might be a year before they can start getting these ships. But there's an exception. I can't talk. There's an exception to the rule here. Spencer?
You okay there, Dennis?
I'm not sure what Dennis is referring to.
Yeah, I'm not sure.
No, I'm referring to that you said that some cruises are still going to be.
Yeah. I think they said that the cruises going from Seattle to Alaska, in October are still good to go.
But that's an awesome cruise. Joel did that one, didn't you?
I did that. Absolutely a must do. Yep. I'm so glad
So
I did that.
they're going to allow that one. It's pretty cold up there, they figure, I guess. I mean, maybe there's not as many COVID cases. I don't know why that's the exception here, but thoughts here. Buy the dip worked last night. Buy the dip and sell the rip on everything. So just talk overall market. Don't even worry about this stock. Yesterday, the last 2 days, let's put this in perspective. The last 2 days on the SPY, we opened down 1,000 Dow points or whatever we were going to open down in the pre-market, but then they started bouncing it even before we opened. We opened basically at the lows on Monday. Yep. Basically right at the lows on Monday. Where did we open yesterday? Right at the exact high on SPY. It opened at the high tick. If you shorted the open on SPY, you took zero heat. What happened? We came right down. So this is just classic. Buy the dip, sell the rip. It continues to work. We're going to continue to preach it at you because it continues to work. Like I said on the show yesterday, if you're buying this open, you are doing it backwards. That's what I was saying yesterday. What happened? If you shorted the open and I was selling everything I could possibly on that open, you're immediately rewarded. And the stocks, obviously, maybe they didn't like what Powell was saying. There were some cases that came out. Florida cases were higher, and we had that tank around 11 o'clock. But regardless, the fade trade has been the way to play this market for the last 2 months. Yes, we've had a little uptrend in the last couple of months. Yes, the buy the dip has been better. But selling the rip has worked as well, because there's been a lot of pullbacks to get the hell out, even when you've been wrong about, potentially buying the dip, selling the rip just has worked.
Right. And you had that intraday volatility yesterday. You can blame it on Powell, or you can blame it out of the cases out of Texas and Florida. But you had Yeah, and one hell of a sell-off. And I believe this is around 11:30. And boom, they came back. They bought the dip. Almost got to the pre-market low yesterday. I mean, a couple more ticks and you would have touched that pre-market low. A lot of pockets. I was watching this also, yesterday afternoon, and between like 31.10 and 31, or let's call it between 3,100 and 31 and a quarter. It was just an absolute chop fest going into expiration. So keeping an eye, the intraday high from yesterday, we got taken out. The high from yesterday should be a good level, 31.56 and a quarter. And then I just got a brick wall here at 31.75, and a couple different reasons for that. But it's the Fed versus the virus, and right now the Fed is kicking butt. So,
well, the Fed has been kicking butt for a long time, and we know when the market goes down, the Fed's going to have its back. So I'm just going to keep trading the same way I've been trading. Like yesterday, I picked up Kohl's on the dip on Monday. I sold it into the rip on Tuesday. It went up 15% in 24 hours. It was like, okay, time to book the profits. Held on to the General Electric. I sold a bunch of other ones too. I sold my UPS out of my swing trade portfolio because did you see the bar? It was a ridiculous move, 2-day move. UPS was down at $99 on Monday, and I sold it at 108. That's a big move for UPS. It just felt like it went from the bottom of the range to the top of the range for the last 2 weeks. I was like, I have to sell this top of the range because it's what's been working. So lots of opportunities there for traders here. It's a trading environment. You can't get a better environment. Like I've been talking about, these last 4 months are March, to give you some perspective. I've been trading for 20 years. The best months I've ever had were in the financial crisis because I do inefficiency trading and you have some wild trading. So 2007, 2008, 2009 were always my best years. Again, I'm going back, though, to those years to find months like this. So March, April, May, and so far June, I believe are my 4 best months in 10 years consecutively. Why? Because the VIX is higher. There's more opportunity. There's more trading opportunities. Stuff's moving around. So VIX goes up, I make more money simply because the moves are bigger. When you're trading inefficiencies, and what I mean by inefficiencies is relationship-based trading, which is what I've always talked about. Like looking at, stocks and trading them versus each other. Simplistic example, the airlines, they all kind of move together. So you see, even last night with the cruise lines, you see Norwegian take a hit. You can be quick. You can maybe get RCL or you can maybe get CUK or CCL, both same stock, on the short. Or if you miss that, then you move into the airlines because they've all been tracking together. And there was a lag there last night, and there's opportunities there. But you got to be quick. So, and you've got to be, on the headlines. Like I've traded headlines for years. But, even, there's opportunities within the banks, trading the banks versus each other. There's lots of different opportunities if you understand the relationships. The reason I make money trading relationships is because 99.9% of the population, 1, doesn't take the time to understand the relationships, 2, doesn't care about the relationships. But if there is a hard relationship there, like a pretty good, correlation between 2 stocks, and people just, indiscriminately sell one stock, but they're buying the other stock, and there may just be random buyers in there because they like the balance sheet or they like the chart, that's going to be where I make my money, is from those people who aren't respecting those relationships. So market is all about relationships. The one I trade every single day is TLT versus the banks. So I'll give you a very simplistic one. TLT in the red, banks usually in the green. Today, TLT is barely down, banks are barely up. But if you see the TLT to start to puke, you will see the banks start to rally. Fundamental relationship, obviously, that's related to interest rates for the banks. But, just understanding that simplistic relationship can make you money, because maybe you're coming in at 5 o'clock in the morning, or maybe you're coming in at 7 o'clock at night and saying, I want to buy Citigroup, I think it's going up tomorrow. Well, if the TLT is trading higher and you're buying Citigroup, you aren't respecting the relationship, and you're probably going to lose money on that. So understanding those little things, if you're trading in the banks, you need to understand these relationships. If you're investing long-term, maybe you don't care about the little fluctuations. I make my money trading the fluctuations.
Hey, Dennis, could you just go over, I mean, we talk about, you talk about a lot of your trades, a lot of winners and a lot of losers. Could you just outline your Lilly trade from yesterday? Because I think
Sure.
people can learn more
from a losing trade.
Yeah, from a losing trade, and they can a winning trade. And actually, I looked at this afterwards, and there was not only one good drug news, but they basically came out with 3 different things.
No, I didn't know that.
Yeah, but
So not
that's all right.
reading enough of the Benzinga Pro headlines.
Yeah, we won't blame Spencer for that.
New all-time highs on Lilly yesterday. Yesterday on the show, I said it was trading at 154. I said I would be selling Lilly if I owned it. And I decided I'm going to short the open. So I short the open on Lilly. I think I get filled. I got to bring up the chart. 156, right around 156, maybe 156.10. It hangs out there and kind of comes in a little bit. You can see the dip down to 155. I'm like, okay, this is going to come in. As soon as it went green, as soon as it started to find buyers and started to go green again, back up, what I mean is as soon as it started to come back up through the opening price at 156, I knew I was on the wrong side of the trade. I'm like, I want to see, when I am shorting a rocket ship, I need to see immediate gratification at the open. I don't want to see follow through. I don't want to see it, all of a sudden and continue to blast off because it's hard to control the risk. So I had my opening price. I got short. I'm up in it for a little bit because the stock opened, kind of chopped around a little bit, but then you can see it leaked down to 155. So as soon as it starts coming back up though, and you're not seeing, and you're seeing buyers re-emerge, and then it starts going through that opening price, that's your time to hit the exit button. So I took it for actually almost an identical scratch from where I opened it, and I moved on. So I decided that, I'm not liking the trading action on this. It's not having follow through sellers coming after the open. So I need to cover my short. So here I take the wrong side of the trade, completely dead wrong, but I don't lose money. And why don't I lose money? Because I have the discipline. And second, I have the tape reading skills to realize I don't like this. This is a bad feeling here. And that's just 20 years of experience reading the tape. But, again, simplistic. Stock has an opening price, 156, comes down, you're short it, comes down a little bit. Okay, it's in the money, comes back up and starts to go through the opening price. Often that means it's going to end up being a big loser for you. So get covered if it comes back up through that opening price. So just, and that's something you taught me back in 1999, Joel. That open is so important. We talk about it on the show all the time. So I saved myself a pile of money by not staying short that stock just because I had the quick realization that I'm on the wrong side of the trade.
Okay, and before I'm going a little offbeat here, and this is going to be a surprise to Spencer and Dennis, but I think we got some Robinhood traders coming into our chat, and so let's start a segment, the Robinhood stock of the day. And
sure, that sounds like fun. I like that.
And this is one, Dennis, I know you're going to immediately want to hop in and start trading this stock. It's called Urban One, and it's UONE.
I saw it yesterday.
Yeah.
It hit my scanners. I'm going to tell you again, this stuff, everybody that just starts trading, and everybody, and not even me, you're naturally attracted to this kind of stuff. It's like, I want to get rich in the stock market. This stock will make me rich. I'm going to tell you that this is the hardest stuff to trade, the absolute hardest stuff to trade. If you're good at trading it, continue to trade it. By all means, if you make money trading the wild stuff, by all means, continue to do it. But I think the people who make the money trading the wild stuff are the people who have been doing it for years and they've just got a different feel. This is not my cup of tea whatsoever. I can't control the risk on this. I won't touch it. The odd time, maybe I'll have some fun in something like this, but this is not going to be where I make my money. I bet you if you added up through my 20 years of trading, every time I've traded one of these, wild stocks, I bet you if you add up the P&L from all of those trades, I bet you I've lost money trading this wild stuff. You might as well just go to the casino and put it on red or black because this stuff could go anywhere. I mean, look at the daily. UONE, we're talking. The stock went from $2 2 days ago to $40 yesterday. And you're like, man, that's the kind of stock I want to trade. That's the kind of stock that is very hard to trade and hard to control the risk. You're going to see wild oscillations. The thing trades with 30, 40, 50 cent spreads, and it's trading crazy volume. But, you could say, even trading this thing at $5, it went up to 16. Then it went back down to 10. Can you take, losing 30, 40% of your money in 20 minutes? If you can't stomach that, maybe this isn't the trade for you, or you need to, decrease the size substantially so you can take it. But there's going to be wild oscillations in a stock like this. There's always a stock like this moving. Believe me, every single day we have a stock like this that's moving. And people want to talk about this. They're naturally attracted to this. But again, This stuff is very hard to control the risk in. Me, I am a good trader because I'm risk adverse. Write that down. Gamblers do not make money in the long run trading. It's people who know how to manage risk that make money trading. Citadel, Virtue Financial. These are two of your high frequency trading firms that are two of the best, firms, trading firms in the world. How do you think they make money? By managing the risk, taking low risk bets, capturing the spread market, making different types of things, but they're
Trading off
managing
retail.
risk. And when they're wrong, the systems work out of it as best as they possibly can. They're not making money trading UONE. Maybe on the spreads, they might be, in there, but for the most part, they're making their money on relationships, on stuff that's more predictable, market making and big caps, stuff that they can control the risk on. A stock like UONE, very, very difficult to control the risk on, but we can do a technical on anything.
And something to keep in mind also, and I'll pull it up in Pro so you can see how many times was this stock halted.
Yeah, I know. I just was looking at that, Spencer.
I don't even
for the
know.
volatility halts.
Yeah.
Volatility.
Yeah.
How many times? Like a dozen times it was halted.
Yeah.
I mean,
which again is ridiculous. They need to widen the spreads. I have written to the regulators about this before and talked to on behalf of Bright Trading that, and I've written papers. I haven't written, but I've written articles on it with CFA magazine about the ridiculousness of the volatility circuit breakers because they need to widen them for certain stocks. They can't have these things sitting, and then they halt 25 times in a day. Every minute they're halting because they can't handle the volatility. When news hits, the bands should go wider. So, and that applies to bigger stocks too. But it's annoying that, you see the stock halt again. I mean, it's just annoying.
Yeah, I'll just look at, big old move yesterday. It hit $40, closed at 27.19. Big volume one day and then exploded. That you had to move from $1.84 to $6.54. And then yesterday it absolutely exploded. It's interesting though. I'm not touching it, but first of all, I would use that close as resistance because anybody that's in it from yesterday, they're marked at the close, and anybody that bought it over 27.19 of the 45 million shares it traded is underwater. So I'm going to use that as a potential resistance point. But I'll just say, someone likes this stock here above $21. I'm just looking at it. I know it's a pretty wide range though, but ever since where did I see that 21 at 17.15. Ever since that, what's that, quarter after 5, someone's been supporting this thing. 21, they stepped it up 21.50. So those are pretty wide parameters. 21 to 27. You'll probably see both of those today. But it's being held up by someone here. So if like Dennis said, if that's something that you're good at trading, go right ahead. But a lot of people stuck over that closing price.
How many traders, and this is, one thing, we've been in the day trading industry, me and Joel, for a lot of years. Joel starting in the pits as a local, as a trader in 87. When did you start? 87?
A little bit before that. I graduated college in 85 and I went immediately down to the Merc. So
and so you're basically a day trader in the pit is what you were. You were a runner and then eventually you were a trader. You basically day trader in the pit. So say you're day trader, basically.
Okay. Yeah. Okay. Thank you.
So we've been day trading. So Joel's been day trading basically since 1986. I've been day trading professionally since 99, retail since 96. A lot of years of experience. We've been prop. So we see traders, these are professional day traders coming in. We see traders come and go. You manage the Detroit office of Bright Trading. We know lots of other prop firms. I talk to them all. We're all competitive. I don't know a lot of traders that have had long-standing success trading this kind of stuff. On the headlines, yeah, and I trade the headlines, but just like, this random oscillations, it's really, really tough. So again, the traders that are successful all have one thing in common. They are disciplined. They think about how much money they can lose on the trade, on how much money they can make. I have no idea. Look at UONE right now. The spread on the thing is 21.90 to 23.15 with 100 shares on the offer. What the hell am I supposed to do with 100 shares? I'm trying to make a living here. So, yes, it can move around, but 100 shares on the offer. I mean, if
How
I'm
much
trying
is
to work
on the bid?
100 shares, it's a buck wide at 100 by 200 right now. Yeah. I need I need to be able to move money in and move money out. So that's why I like the bigger stocks. But there's a lot of small players out there just want to do 100 shares, and that's fine. But I'm trying to make a living at this. So even if you call this thing all right, and you got 100 shares, where you make $500, $900. I mean, it's tough. We're trying to make a living at this. So
Yeah.
and you're going to lose that too. So if I was trading this just for fun, I would probably trade it with 100 shares because I can't control the risk. I don't want to lose 5,000 or 10,000 bucks on this thing trying to trade it with 1,000 shares or 2,000 shares. I don't even know if it's possible. It's probably really hard to get in and out of 1,000 shares of that thing. Anyways, either way, you're a dollar spread. So on a $22 stock, you're already 4% underwater just to try to get in the damn.
With the spread, yeah.
Even with the spread. So it's like 4% in to try to get in. Well, obviously get out. It's 4 or 5% to, just the slippage on this thing. You can say, oh, well, I sit on the bid and, I'm going to make the spread. When you get hit on the bid is when the spread rolls right over you. We've been talking about this. I've been tweeting about the last few days. I did write a paper with Svi Rossoff at the CFA Institute on this and the spreads and talking about how it's difficult for retail and human beings, for that matter, to make the spread because they're always getting hit on the bid when the quote rolls over them because the high frequency traders are too fast. Don't kid yourself. There's HFT in here too. There's HFT in everything. But I'm just saying this isn't where they're making their money, not the big money.
Okay, Dennis, everyone wants to know about your SPCE position here. That seems to be the still in it. Okay.
Yeah, I don't even look at it daily. I mean, my out here is like it's kind of at that area, like this 14, 15, but I just think the story is going to get hot again. You can't do a valuation on it. You can't throw your fundamental hat on this. And this isn't like a huge holding for me. It's a speculative capital. Speculative. So I have it in the long-term account. I think eventually the story could get hot again. I think as SpaceX continues to grow, I think we hear more about SPCE. So I think the story could get hot again, which is why I stay long this stock. I don't know when it's going to get hot, but I think this could eventually get hot and could eventually take off again. So pun intended. So I don't know when that's going to happen. The timing of that's very difficult. Again, if they have launches and somebody was talking about a launch, I'm not sure if Virgin Galactic is doing another launch, but often there is trades ahead of these events.
There'll be news. Yeah.
We talked about that before too, but this is a stock that I could lose a lot on. It could go to zero.
What is it? Less than half? Yeah, but just like less than 1/2% of your portfolio. I mean, right?
Less than that.
Yeah,
less than that even. Like a fraction of a percent of my portfolio. Like
when I do zero.
When I do sizing on my long-term portfolio, if I really like the stock, it might be 2, 3, 4% of my overall portfolio. If I'm like really comfortable, like MasterCard is like probably 4 or 5% of my overall portfolio. But that's mainly because it's just grown into that. It's just taken over. Like if I had never sold any MasterCard, it would have just kept taking over because I just have so much money in the thing over the years. But this, I took like a quarter size of a normal position. So, hypothetically, well, I'm not going to say numbers, but a quarter of a size. So, if you normally buy 1,000 shares, I'm buying like 200 shares of this. I'm not saying that's me. I'm just saying that's, where I'm looking. Very, very small compared to my relative size because the risk is a lot higher in a stock like this. I'm not going to go all in on space because all of a sudden there's a bad headline. You can see what it can do. Look back in March. It was $40, went down to $8. I mean, you lost 80% of your money in that fall in March or just from March. So you got to be very careful buying this kind of stuff. It's high risk. I'm not going to lose all my money. If you're trading Caterpillar or if you're trading, some of these bigger stocks, you can get a feel for, hey, there's some value somewhere. Procter & Gamble. I'm comfortable taking a huge size position in Amazon or Procter & Gamble because you know what? These are real companies that are not going to zero. We don't know. Space is speculative. But with that being said, I think the story could get hot, and I'm taking a flyer on it.
Dennis, what you just said, you said you hadn't looked at it. I mean, you can't see me because my camera's off, but I do the praise Jesus thing because I'm always concerned.
Are you in this? Weren't you in this one?
No, I'm not. But I'm not. No. But I'm always concerned about you when you say you buy something and you look at it like every day and then you get out like a week later. Like you say,
I'm better when I don't look at them.
Yeah, you're better. Everyone's better when they don't look at it.
Yeah.
Not you. It's everybody. So.
Yeah,
The more you
if
look,
you've
the more you find-
designated it longer term, I mean, the one thing is I like to try to control the risk still, so I kind of have, and being in the markets as much, you can't help but know that you own that.
Right.
So even if I don't look at my portfolio, I still know I own it. I'm down in it. I bought it around, I think I bought it around 15.90, so I'm down about 60 cents on it from here. I was up in a bit. It went up like 17 and a half. But so I've kind of been all over the place in this one, but I'm sticking with it.
Yeah, there's no free money shorting this thing either. I did catch it.
Can you even get a locate on?
And no, I did it
Oh, yeah,
with
you
some
can. Yeah, you
options, but I think I even went pretty close to the money, and and I didn't go super far out, and I got a huge drop, and I mean, I got out of it with a profit, but man, if you don't get out of those puts when it's going like straight down, like when you never think it's going to go up again, it bounced 50, 60 cents on you, and that premium evaporates. But no, a lot of people are asking about that, so I just wanted to cover that real quick. A lot of people are asking about American Airlines, and I kind of have a good feel for this one, just the way it's been trading. That open yesterday, man, percentage closed at 1670, open 1836, went another 8 cents. And then reversed. And what are we doing? We're flat today, but man, oh man, 1703, 1655. That major support's down at 14. Kind of in the middle of no man's land here, isn't it? Here at $17.
Follows Boeing.
Yeah, that's what you said yesterday. 9-point move, right, from 23 to 14, 4.5. You got nowhere near 19.5 yet. I wouldn't say this. Is that right? 14 to 23. Yeah, that's 9. 18.5. Holy mackerel. I wish I would have done that yesterday. That 50% retracement of that whole move was 1850, and you got to 1844 yesterday. So opened up into a real good level.
Kind of in the middle of nowhere. I like it down at 15 on the pullbacks just because you got some support and control the risk back there. Again, if you're trading this, you got to keep Boeing on your screen. Boeing is your leader. Boeing has started to roll over here again. Not surprising. Some of these airlines have actually turned to the red because of that. So Boeing is the leader right now. It's going to change, not always that way, but right now people are just watching Boeing for indications on trading these airlines. I'm telling you what the traders are doing.
All right, I do want to get to Kroger, but I fear that might lead to a longer discussion.
Well,
really?
So I want to save Kroger for after our guest is coming on here in a couple of minutes. So let's just do a couple of stocks from the chat. Someone asked about Apple here, so let's just do Apple real fast.
Mr. Elconin, we'll throw this one to you.
Yeah, up 341.
New all-time high.
Yeah, is it?
Yeah, it is.
Wow, above an all-time high. Well, give me the news. News me on this. Is there any news?
I love Apple.
Apple is in the crosshairs of the European regulators, so that's the news. That's not bullish, but
I saw their diversity.
It's all bullish, Spencer. It's all bullish.
I guess it's all bullish. I don't know.
It's all good news.
356. That's your pre-market high. You got a little sneaky seller up there at 356. I wouldn't say it's anybody selling the farm or anything, but that's what I would look for follow through, because 356, I mean, right on the nose. So I don't know if there's an iceberg there, just bipping everything. But that's the only thing I can really give you. If you're shorting this thing and you want to get it back, 352.08's not too bad. That was a close from yesterday, but maybe a better target on the short side would be yesterday's high at 353.20. If you open up and you just start to just go straight up, figure out your average daily range in this one, which is pretty good. I'm eyeballing it here. I'd say it's $10-12. So if you get one of these 355 opens and it starts climbing, takes out 356, 360, you could look for 365. But I'm not feeling that today. I'm keeping an eye on 356 in Apple.
All right, let's bring on our guest now, Mish Schneider. She is the Director of Trading Education and Research from MarketGauge. Michelle, good morning.
Good morning. Can you hear me?
We can.
Excellent.
Thanks for getting up bright and early with us. I know it's really early where you are. So
yes, and I apologize for not wanting to go on camera, but I'm still waiting for my coffee drip to take effect. So
that's okay. We appreciate it nonetheless. It's like I don't know what time. 6:30.
It's 6:35. Yeah.
So.
And I'm up this early, but not camera ready this early.
All right, we
I'm never
appreciate that.
camera ready.
Yeah, we're never camera ready here. Mish, I wanted to ask you, we got a request a couple weeks or a week or so ago from a West Coast trader. And just about, he wanted someone to come on the show and talk about their routine. Now, I think, I know a couple different traders out there, and the market dictates really when you get up and how much, research you do and the preparation. I do a lot of my preparation at night. Can you just talk about, because you go between New York and Arizona, is that correct? Or are you out in Arizona permanently now?
Actually, I live in New Mexico.
New Mexico, nice. Okay. Could you talk about, is your routine any different from when you're east, or could you just talk about your morning routine?
Well, the routine is the same. It's just I'm still an East Coast girl in my heart as far as the way my body clock works. I mean, I would way prefer to be able to go to bed at midnight and get up at 8. So instead, now it's going to bed at 10 and getting up at 6. But in terms of I'm not a big fan of that, but I have to do it. So my routine is pretty much the same. Like you, Joel, I do a lot of my prep work in the afternoon into the evening. So I will look from a macro perspective. I will start obviously with the indices, go to the key sectors, my economic modern family. I look at all the commodities. I look at the dollar. I look at the rates. I look at some of the international country funds. And then from there, I will look at individual stocks, particularly stocks that are looking at phases. And I do all of that pretty much the day of. Then in the morning when I get up, I check Twitter. I check any news. I check earnings. I check to see everything that I had looked at the night before, where it's at. And from there, I start making notes in terms of what positions I might want to put on, if anything, or at least what I would be looking at that might swing the market one way or another. Like, for example, today we had Fed speak yesterday with Powell. We have more of that today. That could be an influencer in the market. More news on what's happening with the virus, more news what's happening with China and India now having some strife. Would they necessarily influence my trading decisions? It really would depend on the technical setup, but that's kind of my basic routine. And because I run a service, I'm also communicating with my subscribers every day, multiple times a day through text and email.
How much attention do you pay to the after hours and pre-market trading? Is it something that you'll participate in or note the price action? I know you like to do futures as well, and they pretty much trade a lot around the clock. Do you use it for execution purposes or for just basic informational purposes?
Well, when I'm in something and I decide to hold into earnings, and if it hits a target after it reports and the market's closed, I will take a profit. Same thing if I wake up in the morning before the market opens and I'm at a profit target, I will take a profit. But I will not use it for stops, for sell stops, for exiting on a loss. That I will use the US market for. In terms of the futures market, I'll be interested in what happens overnight. But at this point, I really feel that I'm okay with looking at the US market and not necessarily, other than I said a gift, doing anything other than the US market or beyond.
Mish, since we last had you on, we've got a number of newer listeners, and I was wondering if you could just walk us through what you mean by the modern family, because that's how you approach the markets. Explain what that is.
Well, what I've done is I put together six different groups. One is an index, which is the Russell 2000, which I consider the granddaddy of the economic modern family. Of the 4 indices, the Russell 2000, or the small cap stocks, are really where you see the best sign of the manufacturing end, or really what I would even like to say the supply end in the United States and the economy. And then I have 5 sectors after that. So I use retail, who I call Granny. That's brick and mortar retail, where obviously has been under a lot of stress for a long time now, even well before the COVID-19, because that's a lot of the mall stores and the chain stores. And then from there, I go into transportation, which in essence would be the demand side. So how fast, how robust are goods moving? And then I use, after that, biotechnology, because that is not only highly speculative, but it acts as a cyclical and a non-cyclical in terms of the economy. You know, it goes up obviously in a good economy, but it can go up when the economy is not doing well, which we've seen evidence throughout this whole virus. Semiconductors, which have been hot for so long because tech is another area that's done well even before the virus, has continued to outperform with the virus because of this new stay at home. So my Modern Family's been around for years, but they only prove to be better and better through every sea change that we see. And then finally, there's regional banks. And I include the regional banks in there because it gives me a breadth of the financial sector, not of the big banks, but of the more rural areas and how robust money is moving, how robust people are using money to borrow for home improvement, businesses, etc.
That's interesting. I'm wondering what you've seen in that area in the past few months, because as we've seen, and I've written about this, a lot of people had a hard time getting PPP loans from the big banks, and the community banks, smaller banks, did pretty well for themselves in this regard. So I'm wondering what you've seen in that area right now.
Well, again, that has been a market lagger. And one of the things about the regional banks I came to learn was when we had the whole oil glut, nowhere to go, and the oil went down close to zero, regional banks got hammered. And we was the first group to get hammered even before we saw the whole market decline in February, March. And so it actually is very much tied to oil money. And then when I thought about it, it made sense because I live in New Mexico, as I mentioned, which is a big oil and gas state. And so a lot of the rural banks hold the money for oil and gas, or people that actually work in the oil and gas industry. And so that's a little bit of a thing that I didn't even know about when I put together my economic Modern Family. But you're right, there has been a turn to some of the banks, the regional banks. But right now, if you look at the NASDAQ, let's say in tech, compared to what regional banks are doing, there's still a tremendous amount of concern here. So this is what's making the market really, really tough to navigate right here.
Mish, this is interesting. So one of the listeners from our chat, this is a little bit off topic, but he said he coincidentally stumbled upon you, or a video that you did over the weekend, I guess, or last week. And he wanted to know just how often you put out free content, and also like, where most of your content is.
Well, actually, yes, what he's referring to is Stock Charts TV. I've been doing a weekly half-an-hour show for them where I have exactly 29 and a half minutes to go through whatever it is I want to go through. And as far as I know, I will be continuing to do that and actually doing a little bit more for them. But I also write a daily blog, Mish's Market Minute, and that goes up on Twitter. It goes up on LinkedIn, Facebook. It's on our website, MarketGauge.com. And I'm extremely active on Twitter. So if you, who's ever asking this question, really wants to ask me a question directly, just go to @MarketMinute on Twitter. I'm there. You know, you asked about after hours. You know, I'm one of these people that checks it, you know, well into the night, and then, you know, first thing in the morning. And if I have to go to the bathroom in the middle of the night, I try not to, but I might. So what I'm saying is I'm available.
All right. So another question from our chat here, Mish, about your favorite trading setups.
This is an excellent question. Well, my favorite trading setups really basically come from, is it in line with what the overall market is doing? And if it's not, and if it's going counter, there better be some kind of good reason for that. Then what I will look at is the phase. I wrote a whole book on this called Plant Your Money Tree, A Guide to Growing Your Wealth, which is about these 6 phases. And so I will look at to see whether something is phase it's in, how long it's been in that phase, or if it's actually about to change phase, which if that's happening is the most explosive time really to get into a stock. And then from there, I'll take it down to where the pivots are. So in other words, I look at floor trader pivots, which are midpoint pivots, and I look to see if they're positive or negative based on where they were the day before. And then finally, I'll use an opening range. And that's really comes from our days on the floor. Joel, we love to talk about the floor, because on the floor, the markets would open month by month, and then it would reopen. So that really got us to developing the whole idea of this opening range, which could be a 2-minute when something gaps. It could be a 5-minute if something is also gapping, but you want to give it a little more time because it's not, say, a breakaway gap, or typically a 30-minute opening range. So if all that lines up, phase is good or not good, and I want to go short, it has a 30-minute OR breakout or breakdown, the pivots are lined up, etc. It's in a sector that aligns, the overall macro is not in a situation where the market's going to crash, then I feel very comfortable going in. Of course, I always have my risk in advance, knowing how much money I'm going to lose. And the most important thing is the position sizing as well.
Mish Schneider here, MarketGauge, joining us here on Benzinga's pre-market prep show. So great to hear your happy and cheery voice. Just going back to the commodities here. I think everyone's sick and tired of me talking about the rollover here in the futures. You've been around for a long time. You see a lot of times on these quad wedge expirations, you see major turning points, major highs or major lows. Just talk about your trading style during a rollover and any tips you may have for traders or investors.
Well, everything changes constantly. Like, for example, in some rollovers, like in the rollover that we had in the beginning of this year, being in interest rates and being in gold was smart, and being in miners. And then in the most recent rollover, everything liquidated. So in terms of the futures, what I'm really looking for now at this point is bottoming action in the soft commodities, particularly the food commodities. If I had to give any kind of focus, that's really where I'm focused. So I'm looking at soybeans and corn and wheat, which have been struggling. I have been looking at sugar, which is basing. I've been, obviously in and out of gold so many times over the course of the last several years, and we still have a core position in gold. So as far as I'm concerned, commodities is still the best opportunity we've got going into the second half of not only 2020, but as we go into 2021, because the ratio between equities and stocks is still, not equities and stocks, equities and commodities is still at historical lows. And this is not sustainable, mainly because of the fact of the Fed and the helicopter money and the money supply and the debt and the world demand that is increasing for basic raw materials and supply chain disruptions, etc. So the rollovers might be more from a day to day or a week to week or even a season to season, but for over a long course of time, really focus on that. And I just want to say, Dennis, you mentioned two stocks. Space, I went on Real Vision and I said that space was a pick of mine. And of course, it's always a technical setup, right? And you said that you had a core and you were holding. I actually agree with you. I think that space, if you keep watching it, obviously it'll move with the market, but that's something that is very much a focus. We had a position, we got out. I'm looking to reestablish it.
What do you like about the technicals about it?
Well, it's holding that 200-day moving average like a rock. Mm-hmm. Now, hasn't moved up from the 200-day moving average, but remember we just talked about phases. So the 50-day moving average is up at around 1680. I'm not saying you necessarily have to wait that long, but I'm kind of with you. I don't think we're going to see this go down much below where it was around that 1450 level. And I would like to see this maybe get back over 16 today, and that might get me in for a starter position. So I'm with you on that. And I live in New Mexico, by the way. Spaceport is in New Mexico, right? So
you can watch these launches.
Exactly. We've gone down there, and it's fascinating, really. And the other one you mentioned was Kroger.
Right.
And I kind of like Kroger too, because it's been choppy as all heck. I mean, it's frustrating, but it is up 2% in the pre-market here today. And it's starting again, that 50-day moving average. It's been up and down, but right now it's going to hold it and gap a little bit above that in the 10-day moving average, which is nearer term. I'm still into that too. So I'll be watching both of those stocks
reports
today.
Earnings, I believe. Is it tonight?
It's tomorrow.
Well, I probably will wait then until after.
So Kroger's earnings are coming. Sometimes you see this little run up ahead of the earnings, so it's not surprising. But this stock's been range bound for a long time. I mean,
it has
31 to 34.
Exactly. But I think, I still think that if we get any kind of scare and people start shopping like crazy again, we have a Kroger's right here in Santa Fe. I think that could help it. I think they've done a really good job of navigating as far as the virus goes. And I just like the stock. I like the company. I like what they've done with being able to order online, to have a delivery service, etc. So you picked two that I like, Dennis.
One more. Oh, go ahead. Go ahead.
Joel, we got a lot of questions flying. Joel, go for it.
I just wanted to know how much crude you bought at -40 in the mix.
Well, I did write a blog, speaking of blogs, that this is the opportunity of a lifetime to buy oil down there. And
Down
so
negatively.
oh my God. I mean, yes, that was just insanely cheap and ridiculous and unsustainable. But now, I think actually I'm still more on the positive side to oil. Long term, no. I mean, I actually really would like to see the world get away from oil and go more towards alternative energy. I mean, this is why Musk is, still Musk, man. Might be crazy as a loon, but guy's a genius. He sees the future. But now, right now, I'm looking at, if we looked at USL, which I've been looking at more than USO, which is still a United States oil fund, just on the basis of that, if we clear 15, I think we could at least go up a couple of bucks, maybe 3 from there. And I think you have a pretty limited risk, really about $1. And
what is the difference between USL and USO?
I think right now, during the whole decline, USL just proved to be less volatile. That was one of the reasons why I liked it. It doesn't have nearly as much volume as USO does. It has an average volume of about 500,000 a day. USO, the chart looks very similar, but USO is not as strong. If you look at the USO chart, it just yesterday got.
I see. Okay,
Yeah.
so USL spreads out their allocation over 12 months, and USO didn't do that, and now they have.
But now they're doing it, so they're similar anyways.
Right, yeah. And it's split 7 times, and you have a whole contango issue. USL just seems to be a little bit smoother to me, so that's why, even though the volume USO is over 11 million, and this is a 500,000, but that doesn't necessarily bother me at this point, and it's ticking up here a little bit in the pre-market. It's 1448 bid, 1455. It's got to get through that 15 though, I think. And then, there you go. Oil will continue to go up, which will be positive for the market. We'll see. I mean, who knows? At this point, it hasn't gone up with the market. It just stabilized. If it starts to go up with the market, then we may have more inflation concerns. That's my other thing I'm watching is stagflation.
All right. A lot of fans in the chat for Mish Schneider. She is the Director of Trading Education and Research at MarketGauge. We've mentioned her Twitter today is at Market Minute. Mish, thank you so much as always. We got a lot of positive feedback. We'll have to get you back soon, but thanks for getting up early with us. We appreciate it.
Yes, thanks, guys. I'd love to come back. So anytime. Right. Thank you for
Thanks,
having
Mish.
me. All right. Bye, Joe. Bye, Spence. Bye, Dennis.
All right. Oh, cut her off there.
Bye.
Well, all right, let's go back to Kroger here for just a second. This came up on the
Should we go into the Kroger discussion or not? I'm scared now.
No, don't be scared.
Why are you scared?
This came up on
Yes, you've never been scared in your life. So that one time I yelled at you when you came in the office really hungover at 9:29 and you expected to trade that day. That's the only time.
No, I often came into the office back when I was 22 years old at like 11 o'clock. Remember, I'd come in, it was a rough night, and I'd come into the office back in your just after university days, and I'd be like, "Oh, the afternoon shift's here, everybody can go home." Joel would give me heat. Joel gave me a lot of heat in my younger days. That's why I give him heat now, because he gave me all kinds of heat when I was 22. He'd have to kick my ass all over the place.
Paying it forward. All right. So this came up on the pre-market show. We were talking about this, and I think it may have been Joel, maybe me. I think it was Joel who said, "Why is Kroger up this morning?" Didn't see a headline. Dennis, you knew why. You knew why it was up.
All right away. Fast Money. Michael Coe. It's Michael Coe. Had he does a segment pretty much nightly on Fast Money where it's he's looking at options. He's looking at big options purchases or option sales and looking at the puts and calls and trying to, and usually they do the stocks that are coming up on earnings. So he's trying to, look at them and say, that potentially somebody knows something. So last night he highlighted a big option buyer in Kroger, and it's crazy how, people who say retail can't drive stocks, the stock was trading flat and it blasted off to like 33 and a half. From 30, this is Kroger, it's a grocery store, from 32 and a half to 33 and a half because somebody saw something in the options. So it's ridiculous. I mean, the move today, I feel like, is ridiculous because it's all just off of somebody saw an option buyer. There's option buyers and sellers all the time. With that being said, you do have a catalyst. The earnings are coming up. Full disclosure, I do have an overnight short position in Kroger. I was fading that move last night. I will cover this at the open. So this isn't a long-term trade. I agree with Mish. I actually don't mind the chart long-term here. It all is going to depend on the earnings. But, I kind of like Kroger from a long-term perspective. But short-term, Kroger goes up $1 because somebody sees an option buyer. I short it. I don't think it's justified move. So we'll see what happens. It's holding up very well today. I'm actually surprised it's still holding up as well as it is. We'll see what happens after the open. But my point being, and I want to make this point as well, is Michael Coe pointed out, I think I'm saying his name right. Am I not Coe? Is it Coe or Cow? Coe.
Okay. I don't know.
Michael Coe.
I thought it was
so he pointed out 2 weeks ago, he pointed out a big options purchase, and I think I want to say, I don't remember which stock it was, but it doesn't matter. The point was, he pointed this out. He does a whole segment on this big put buyer that he noticed in the market. And then they throw it to Karen Feinerman, and they're like, what are your thoughts on this, on this big option put buyer? And she's like, I don't think this has ever happened before. But she's like, that was me. She's like, that was my put. That was me. That was actually my orders. Because Karen's, a hedge fund manager. She's got big orders. She's like, those were my puts that I bought. And she's like, the reason I bought puts is because earnings is coming up and I'm nervous to go into it, but I want to stay long the stock. She says, I'm still bullish the stock, but I bought some puts to hedge myself. So here, Michael Coe just highlighted a whole thing on how somebody might know something and they're taking a speculative bet into the earnings, and that was proven wrong 10 seconds later when Karen Feinerman came on and said this was just a hedging and she's actually bullish the stock. So what my point being, it's like trying to find a needle in a haystack by looking at options activity and saying, oh, this person knows something or this person knows something. This is the second time I've seen this happen, because about 2 years ago on CNBC, so they were pointing out again, it was a big call buyer, or it was some type of options trade. And my buddy Chris, who's a very big trader, manages a lot of money, texts me and says, Denny, you won't believe this. They just pointed out my options trade on CNBC, and it was a hedge. I'm like, I don't know anything. I don't know. It was a pure hedge. I needed to hedge myself into the report. So again, here's a second time that was obvious that they pointed out an options activity that was completely it was just a hedging activity. So how you can determine which options buys and which options sells are hedges and which are actually speculators or which are potentially inside information that they know something is very difficult to do. Again, if you do these strategies and you make money doing it, by all means, continue to do it. I know the Nigerians have been very well at doing this over the years. So, if you can do it, that's fantastic. But I've tried this stuff before. It's very difficult. I don't know how you determine which are the good ones and which are the bad ones. So like which ones, potentially are just hedges. I don't know. I think most of it's just hedging activity, a lot of it. So when you see these big option buys, there's big funds out there that don't want to go naked long through a report. So they hedge themselves. So, pointing them out, we don't know. It's not designated hedge or speculative or insider buy. It's just speculation on, and the segments attract viewers. But I don't think there's that much, I think it's very difficult to make money following options activity. That's just my thoughts. I might be wrong, maybe. And like I said, by all means, if you do it, continue to do it. But it's hard to determine what's hedging and what's actually somebody who might know something.
All right, there it is. We got it under the wire. So good job, Dennis.
Yeah, that's just my thoughts. I mean, this is my opinion. So obviously, like I've said before, there's some people who maybe do this stuff and they do really well with it. I don't know how they do it. So I don't know how they can determine it. And, Michael Coe pointing out an options, it was this hilarious segment from 2 weeks ago. And Karen's like, that was my hedge. You pointed out that, something, this put buyer might know something. It's like, no, just a hedge. And he must be like, anyways.
The eagle-eyed viewers in the premarket.benzinga.com chat know that was Lululemon they were talking about.
It was Lululemon.
So,
That was the one of the funniest segments I've ever seen. So, and it just proved my theory that most of this is just hedging activity that you're pointing out. You keep pointing out these options, and some people may be really good at, like I said before, the Nigerians have obviously done this very well. They've got books about this stuff. They, or do this stuff, and maybe they've got some different edges with it. I've never explored it deep enough to say it just flat out doesn't work. I'm just saying it's probably very difficult for you, if you're just starting trading, to just jump in and say, oh, I see a big options buyer, to determine that, yeah, this is potentially somebody that knows something. I'm going to get long the stock because they know something. Very difficult to do.
Yeah. All right, I'll wrap it up here. I'll pull up a watch list I made on Benzinga Pro, the stocks we talked about on this show this morning at some length. If you want to keep them on your radar for today, I'm sure Joel and I will discuss a few of them at our closing show at 3:40. I want to thank our guest, Mish Schneider. Thanks to all of you in our chat. For a free trial and subsequent discount to Benzinga Pro, click on the link in the description of this video on YouTube. Also, don't forget to subscribe and like our videos while you're there. That helps us out with their algorithm. You can always catch a replay of this show on our podcast or just rewatching the show on YouTube. The podcast is available pretty much on every major podcast platform: iTunes, SoundCloud, Stitcher, Google, TuneIn, etc., etc. Shoot us an email if you have any feedback, premarket@benzinga.com. And the last thing, please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a great rest of your Wednesday. Joel and I will be back at 3:40. Until then, stay safe and good luck out there. These are tricky markets.